So next up in the property training, we're going to be looking at why property. So why could and should you maybe consider property as an investment, as an asset, as a business to kind of grow and scale around your lifestyle? Now, one of the reasons why I love property is that at its core, there's a couple of main basics that property can deliver. Now, it's still an investment, so there are still risks and reward with property, but there's some core underlying values that kind of underpin property as an asset class. Now, one of those is it's relatively forgiving. So if you buy property and make mistakes on the purchase price, if you hold it over a long enough period of time, you can still come good on that asset. It's exactly what happened when I bought my first property back in 2005. We overpaid for that particular property, but it still had the right fundamentals. It was still in the right area. It still had the right sort of tenant profile locally, generally. And we were able to hold it and maintain it over a period of time that was long enough that derived us a return from that and a profit from that property. So even if you do make mistakes on original purchase prices, you can still come back on that. So property is relatively forgiving as an asset in that respect. In addition to that, there are other benefits. Another of those basic fundamentals is it's tangible. It's an asset that you can kind of go and see, you can feel it, you can touch it, you can view it, so you know it's there. Also has a regular supply and demand equation to it. So you know that in any given market, even if prices are going down, even if there is a recession and the underlying value of that asset is reduced, you should have demand for that as a rental. So you should have an income coming in over a period of time on that particular property. So it has a relative stability to it, although there are, as I said, risks and rewards of property, and certainly there can be recessions, certainly property prices can drop, but even in those times, you should have that underlying kind of value to an asset, you should have that underlying income coming in from that asset. Then when prices are increasing in buoyant times, and certainly over a longer period of time, you should have equity growth in that property. Certainly inflation will kind of come into that, and you might rise in line with inflation, or it might be slightly above inflation, based on certain statistics in certain areas, certain time frames as well. Like, you don't have to get double-digit returns, it doesn't have to double in price every sort of 6 to 10 years, as it has done historically. Ultimately, it's about sort of stable long-term growth. So if you buy on the right fundamentals, you should have equity increase over a period of time, and you should have income coming in on that property on a year-by-year basis. Again, as long as you buy it on the right fundamentals. In addition to that, property generally is available for all types of individuals and all types of investors, whether you're starting from zero, no experience, no properties at all the way through to if you have an existing portfolio and properties under your belt. There will be strategies out there and methods out there that you can go out and add to that existing portfolio. Methods that you can use to increase your rental yields, methods that you can use to make your existing assets more valuable, developments, things like that. There's always options, always different ways that you can really make use of those different properties and assets. In addition to that, it's also suitable whatever your starting pot. So if you're starting with £1,000 in the bank or £1 million in the bank, there will be options and strategies out there for you to get started. So as a core fundamental, that's why I love property. There's lots of different kind of basic foundational kind of benefits to property, and we'll go through the rest in this training video now on the other benefits that you can derive from property as well. Another great benefit to property is that it's generally reliable. Now, it's something that generations of individuals, families, governments, businesses have invested in as an asset class, as a way to bring stability and reliability across a portfolio. So you know it's there, it's tangible, and it's something really that's been available and been around for hundreds of years. It's not some new business, it's not some startup, it's not some MLM scheme or tech scheme or anything like that. It's something that generally at its core is reliable and has an ongoing inherent demand as a service. Now, success also leaves clues. That's another great thing about property, is that you can learn from others that have already been there. So you don't have to reinvent the wheel. You don't have to get started with some crazy new kind of startup where you're paving the way. You can really learn from people that have been there, done that, got the t-shirt if it were, by understanding the methods, understanding the models, understanding the strategies that have been tried and tested time and time again, across different locations, across different models, across different tenant types. Not only that, but you can also really shortcut some of the learning curve by working with experts. You can work with experts with mortgage brokers, solicitors, accountants, refurbishment teams, letting agents, people there already set up that have experience within the industry at different levels of the chain to really help you grow that portfolio. And finally, there's also companies like ours that you can work with that will share with you everything we do within our business on a day-to-day basis in our training, and also really give you the forecast, the cheat sheets, the checklists, everything that you need to go out there and grow a property portfolio without having to make those kind of same early mistakes. Property is also secure. Now this might sound a strange comment, but it's hard to steal. It's a secure, tangible asset that you know is going to be there. It's not something that's just kind of hidden in the ether or hidden behind a computer screen. You know exactly what it is, where it is at any given time. There's also an established legal system in the UK that's set up and structured to buy and sell property. So you can do the right due diligence on any property you purchase before you purchase it to try and reduce and eliminate any of those mistakes around buying it. That's everything from surveying the property to make sure it's the right type of security, effectively, it's not going to fall down, it's the right sort of property for you, all the way through to the actual legal system, conveyancing and buying that particular asset as well. So it has a very good element of security to it that some of the benefits, or sorry, some of the assets, some of the investments and businesses don't necessarily have as well. Property is also very scalable. Unlike some of the businesses where if you get started, it's very hard to stop when you get to some kind of level of scale. And even when you're first starting out, property is different than that. You can buy one property in property and ultimately stop there. You can give it to a managing agent, you can get it systemized, you can get it set up, so you're not having to be hands-on with that property. Likewise, you can also go on to buy 2 or 3 or 5 or 10 or even 100 properties at scale and still be hands-off. There's still systems in place that allow you to have those properties managed, systems in place that allow you to have those properties refurbished, looked after, maintained over a period of time. So you don't have to be hands-on day-to-day in the weeds of that setup, unlike some other kind of businesses. So it has an element of scale there that you can scale it to any size that you wish. As I said, whether that's 1 property or 100 properties, you have that flexibility. And that's a great thing that property brings that some of the businesses you don't necessarily have the luxury of, unfortunately. A property can also be very profitable as well. Now, as a straightforward rental asset, you should get rental income from that property over a period of time. Now, on a straightforward vanilla buy-to-let, we'd usually try and achieve about 8% plus rental income. Certainly in some parts of the country, London or the South, for example, it's going to be very difficult to achieve those sorts of yields. But the trade-off for that is that you should get slightly better or better capital growth over a period of time. And you have that combined potential income and profit centers from that asset. You have the rental income and you also have the potential for equity. In addition to that, because of the inherent supply and demand kind of curve, everybody needs kind of a home as long as it's in the right kind of area. You should always have strong tenant demand. If you buy with the right fundamentals, not only should you get a good profit from that income or from that asset, you should also have a regular income stream coming in. One of my favourite benefits for property is the return on time spent. Now again, unlike other businesses where you might have to be day to day in the weeds of the growing of that business or the scaling of that business and the structuring of that business, property is already set up as that, as an industry, to allow you to work with other parties to bring that benefit and return on time invested. So if you wanted to get started in property and you wanted to use a letting agent from day one, a refurbishment company, even a sourcing company to find the deal, a solicitor to manage the purchase process, you can work with those experts straight away that will reduce the amount of time you need to invest in that particular asset and in that particular business. If you start on day one without much funds, without much kind of knowledge or contacts or experience, you can get to that stage of scalability relatively quickly. We can also assist with that. In our VIP training, we have a little black book of resources that gives you all of the contacts, all of the individuals that we use day to day in our business to allow you to go out there and scale a property portfolio that really achieves the lifestyle and the time invested that you want. But it can be a great business for that. It can be a great income stream that doesn't rely on a lot of kind of day-to-day one-on-one time for you to manage that portfolio. And that's one of the benefits that I really love about property as well. Not only return on time spent, but you can also get a great ROI, great return on investment with property. Now this is easier for me to explain really on a computer screen rather than maybe even a whiteboard or certainly on a one-on-one kind of video. So I'm going to jump from behind the screen here now to give you a bit of an explanation on a return of investment and really looking at things like leverage as well and how property can really assist with that as you start to grow a portfolio.
So to give you a bit of an idea on the power of leverage, So let's for instance say you're going to be looking at a property that's worth, for example, around £100,000. Now if you were to buy the property with no leverage, and maybe there was a 10% increase in house prices over a period of time, and that's not saying it's going to happen kind of overnight or within 6 months or whatever it might be. It could be over a number of months or years even, but let's just say for this example there's an increase of say 10%. So that's going to give you a £10,000 return, which is a 10% return on investment, and that's pretty good, depending obviously on the timeline it's over, but that's pretty solid. Now in example 2, if we take that same property, so £100,000, but look at the example with using the power of leverage, what would happen on this occasion would be you'd have a deposit here of 25%, typically with most mortgages, and a 75% mortgage. So these are very basic figures, but this would be 25,000 investment of your own money compared to a 75,000, or sorry, added to a 75,000 mortgage. So again, if we had a 10% increase in house prices, same property over the same period of time, this would again give you still £10,000. But your return on investment is going to be much higher because you're using leverage. So you've only put in 25,000 of your own money here instead of 100,000. So a £10,000 return on 25,000 would give you a 40% return on investment. And as you can see, that's much more increased than the 10% return in example 1. So that just gives you a little bit of an insight into how leverage can work, and really the power and effectiveness of leverage. Because you don't then actually need £100,000, so for this example, of your own capital. So if you were leveraging by using a mortgage, this could mean that you'd only need a smaller deposit to buy the property, and then you can buy the same £100,000 asset with only around 25,000 of your own money simply by using leverage. Now there are ways that you can even do this without having that £25,000 to start with, and I'll show you strategies in the next video in a couple of days time which will run through the different elements of how you can do that by using things like joint ventures partners and partnerships, and also very simple income building strategies, but we'll go into that in the next couple of kind of videos. But just to focus again back onto leverage, you can see here really the profound effect of what it has with kind of catapulting your return on investment. And if we think about that for a second and leave these examples just on the screen here for another couple of seconds really for you to have a bit further of a look at, you can hopefully see that obviously the change or the benefit that you can get with leverage. So that's the first thing about how kind of leverage can work very well with property. The second element of this kind of power is that it ties in very well with things like inflation. Now, over time, inflation reduces the value of real money because as prices get more expensive, you can then kind of buy less and less with your kind of £1 coin or £10 note. And inflation happens every year, and although the government has targets to try and keep it down and around usually 2% per year, over the last couple of years it's fluctuated quite kind of rapidly really. It's been up to around kind of 4%, and if you wanted to check out kind of the latest inflation figures or targets, simply go to the Bank of England website and that'll give you a bit of an idea as to kind of where the economy's heading and what the government are trying to kind of maintain with inflation. But when inflation rises year on year, as it has been doing, and as it does typically regularly, just to kind of varying degrees, what actually happens is when you're using a mortgage, let's say for the examples that we looked at previously, and you're using leverage on a property, your actual mortgage year on year would typically be staying the same. So if you're on an interest only mortgage, the value of what you have to pay back would be the same. Or it may even be going down if you're on a repayment mortgage. So again, if we just think about that kind of for a second, because this is very powerful, because when your value of your debt isn't increasing, but in real terms the balance and the value of your real term mortgage is actually getting eroded year on year, even without any change in property prices. So I just want to recap on that very quickly again, because it's quite important. So this is very powerful because the value of your debt isn't going to be increasing over a period of time, as we mentioned, but the real term balance, so the value of what your real term mortgage is valued at, if it were, is actually getting eroded year on year due to this inflation, and this is even without any change in property prices. Now this is important because I could kind of spout the usual rhetoric that a lot of people do, is that house prices double every 7 to 10 years and that's why it's so great and that's why you should invest in property. And if you've ever heard this comment, then you don't have to go on blind faith. If you're a stats geek like me, you can look at kind of house prices, statistics from Land Registry and other house prices areas, and indices like Nationwide and Halifax and things like that. And that's all well and good, and that might average over a period of time, but certainly in times of a recession, or certainly in times of stable house prices, this statement doesn't really mean anything, because those prices doubling or those prices changing don't really happen within that short space of time. It's only over a longer period of time or number of years. So what's really important is that it's good old solid cash flow really that's in the back of your pocket that's going to matter. And this is why inflation and leverage are so powerful together, because with leverage, even when house prices aren't increasing, inflation is working its magic and reducing the real term value of that initial debt, as we mentioned. And this is one of the key benefits really of property investing, and how and why it can outperform a lot of other assets or businesses or industries. Because on its own you have the things like the ability to be a stable and secure long-term asset, also be profitable with things like cash flow and income coming in from the rents, but the ability to have that high return on investment with things like leverage is a great advantage, and that's one of the reasons why property is a great asset and business. So the next thing to consider, as we touched on briefly there, is cash flow really, and the cash flow part of how property investment can work, which is generated from rental income. Now inflation is working for you on this side of the fence too, because year by year as inflation grows, so will things like people's wages and the rental value of the property and what the rental income can be achieved on those particular properties. So over time, as your debt is staying the same, your rental income can still increase. So regardless again of what's happening with house prices, you don't have to rely on them doubling or increasing year on year. You can still see how the power of inflation works. So your debt stays the same, but your rental income can increase.
And finally, one of the great benefits of property over and above some other assets and some other investments and stocks and shares, things like that, is the ability to add value. Now there's 3 different ways that you can kind of add value with property, and all give you a fantastic uplift in its inherent kind of value as an asset. The first way is by buying at value, so you can negotiate on the purchase price. Certainly there's properties out there where sellers won't move on the price and you're going to be quite limited on what you can buy it for, but there are lots of opportunities out there where you can buy at good prices, and by simply negotiating on that initial purchase you can lock in some great value in that original deal. In addition to that, you can add value, so you can create value by doing a refurbishment, doing a development, extension, even just a straightforward kind of modernisation of a property can create a good uplift in value on that asset. And finally, you can add value when you sell. So maybe a different tenant strategy that you can add to that portfolio of properties or add to that individual property will give you an increased value to an oncoming buyer. So there's 3 different stages of that process that you can create value. You can buy value by negotiating, you can create value by adding some form of refurbishment or development to the property, and you can also add value right at the end of the project by having a different income stream, different tenant profile that increases the yields, that gives it more value to an ongoing buyer. So there's lots of different ways that you can really ultimately benefit from property, as you can kind of see why property can hopefully help you get the income and the lifestyle that you're looking to achieve.